Hi, it's Romeo Caporaso from Tax Accounting Adelaide. It's July in 2020 and giving you an update on what's new for tax return season in 2020. So one of the good things I wanted to say is you might recall last year when you did your tax returns with me, we claimed a new tax offset of 1,080, and that's around in this tax return as well. So that's good. And that is perfect for people between 48,000 taxable income and 90,000 will receive the maximum offset of 1,080. Another change, you may have really noticed this happening last year, but with the introduction of single touch payroll, which means employers have to send your pay details, every pay detail of yours electronically through to the ATO, you may not get a payment summary anymore. So that information is available, and us as your accountant, we can see that for you, but it is dependent on when your employer actually sends to the ATO. So as soon as we can see that, we're able to do your tax return. If you do have the information before us, please give it to us if you have received the payment summary. But it is good to maybe look at just checking with us so we can see that information on your pre-fill before we go ahead with the tax return, or maybe wait till mid-July when that information plus other information such as your hospital cover tax statement, and interest from your banks will all be there. So we do recommend not rushing in the early part of July, because there are chances of you missing things in that early stage, because we rely on your information then, because we can't see it on the ATO. So of course, please come in. We'll do our best if you really want to come in early in July. But yeah, just a word of warning that it is better. The ATO will have more information about you just later in July. Obviously, in Corona times over this year, a lot of you may have been working from home, whether you're in business or employees. So we need some information on that. We'll try and make it as easy as possible for you. But please bring any expenses you've had in running your work from home, or diaries of time that you've been working from home, dates. If you count the dates and hours that you've been working from home, that'll be fantastic. And also any expenses like new screens, laptops, computers, office desks, etc. Bring that information in, and we'll help you do your claim as best to maximise your claim as best as possible. Obviously, with COVID-19 over the last year, there's been impacts on businesses. For instance, they've had cash flow boost payments, which have been paid to businesses which had wages and did a BAS return in March and now June, and the minimum payment there was 10,000. That's actually a tax-free payment, so you don't make sure that your accountant's not putting that into your tax return. So just make that clear to us or your tax agent. And also, there's been an increase in the immediate asset write-off deductions from 30,000 to 150,000. So if that's applying to you, let us know as well. And that came in obviously from 12th March when Corona hit. Also, a lot of you may have been receiving JobKeeper either as an active business owner or for your employees. So we need to know that there's no GST on that, so make sure you code that correctly, but that is accessible income to the business. Another change has been there will no longer be deductions for having vacant land, which may be in the process of being built to be a rental property. So you can now only claim those under certain exceptions, such as being a developer, using land to help you carry on a business, for instance, if it's a car park of your business, for instance. Yeah, basically, if you are building a property now for a rental property, it needs to be completed and ready to be rented before you can now claim it. So no longer can you claim deductions for vacant land, such as interest on the loan, land tax, council rate and maintenance and rates. Job keeper payments and job seeker payments both need to be included in your tax return. So again, that's something that will come from the ATO, but if you're rushing over in early July, we may need to be a little bit careful to including that. Now, if you're a non-resident for tax purposes and you're selling property in Australia, there has been changes if you're foreign tax resident into the main residence exemption if you're now living overseas. So that might affect many of you, but if you are now living overseas or no longer a tax resident and thinking of selling your home, there may be some tax implications there that we need to go through. Also, there's been expanding tax incentives for investments in affordable housing. So there's been additional capital gains tax discounts to some Australian residents who do this. And so that'll increase the capital gains tax discount to 60% for qualifying investors. Some of that may apply to some of you. And another sweet little change has been that the company tax rate would reduce to 26% from the 1st of July 2020. So that won't impact your 2020 tax return, but we're now into the next tax season, which is 2021, and when we do the tax return there, we'll be charging, the tax office will be charging just 26% on company tax rates, which is great. And if you do want to look at reviewing your entity because of the reducing tax rates on companies, we're happy to help you as well. But anyway, I'm Romeo from Tax Accounting Adelaide. Looking forward to seeing all of you over the tax season, and hope you enjoyed our What's New in Tax Season 2020. Have a great day. Bye.